Welcome to another episode of Mizuho Markets Mindset. I'm here with my colleague, Rich Soto, who covers the TMT space for Mizuho's ECM effort. So, Rich, when we think about the IPO market year to date, we've seen north of $20 billion of issuance. We are clearly heading towards surpassing last year's 30-ish billion of issuance. And importantly, we've seen the performance of the IPO class of 2025 be up 40+% year to date relative to the S&P at almost 7.5% year to date. What do you think's happening in the TMT IPO world right now that's causing investors to be so excited? And what do you think is driving TMT valuation overall?
So we've seen very resilient equity markets, in particular in the TMT space, especially anybody who has AI tailwinds to them. And certain other subsectors, such as crypto, have really outperformed, which has driven a lot of the pipeline that we're seeing into year end and those that have already been executed earlier this year. What we're seeing over the next couple of quarters is overall, a lot of the transactions that didn't get done over the last couple of years, companies have gotten together, they've organized, they've cleaned out their capital structures, and they've come out better companies. And those are the ones that we're seeing execute over the next couple of quarters. And those have gotten done already this year.
And Rich, when you think about private market valuations, we went through a window where companies were staying private for longer. People were questioning valuation because there were a lot of valuation resets relative to where people did private rounds in 2021 and 2022. How have VCs and private equity firms started looking at valuation and thinking about it in the context of taking some of these portfolio companies public?
I think, first of all, there's no negative connotation towards a down round. We've seen Reddit and others come out and do IPOs below their last private round and do very well in the public markets. I think the other thing is a lot of the best companies have grown into those 2020 and 2021 valuations. So those data points around, where you got valued in 2020 and 2021 for the best companies has not really been an issue. What we have seen is for some of the companies that probably overstretched in 2020 and 2021, those have not, are unlikely to come out if they have not grown into those valuations, if they're way below. I think what we're seeing there is a much more active M&A market taking those companies out.
Got it. So when you think about, post Labor Day here, we're coming up on the end of the summer. When you think about activity post Labor Day, what are you seeing in the TMT space, and what are your expectations in terms of the kinds of companies that are going to come out in, post Labor Day through the end of the year?
We're seeing a very broad subset of companies coming out, but in particular, we see anything with AI tailwind is, top of mind for investors. Anything in the crypto and broader fintech space, we see a lot of activity coming out in September, October, and through year end. And I think cybersecurity and infrastructure software is the other sort of major area where we see a lot of activity heading into year end and early 2026. So Josh, maybe talking a little bit away from the TMT space, what are you seeing in some of the subsectors that you cover, like industrials and consumer?
Yeah, look, I think in the industrial space, we've seen defense companies pick up issuance. We saw 3 IPOs earlier this year. And with the current administration and the commitment to spending in that space, see a ton of activity right now in defense technology companies, a lot of startups driving high valuations through private raises that will need a lot of capital and will not necessarily have full access to the debt markets. So we expect that to be a space that's very hot from an industrials IPO standpoint. And in addition to that, we're starting to see some sponsor activity amongst the industrials companies. There are sponsors that have been sitting on portfolio companies for 3, 4, 5 years. We obviously did not have an IPO window open the last several years. And now that we do have a window and multiples are attractive, we're seeing those sponsors think about taking those companies public in the next 12 to 18 months. So I think it's going to be a very busy year the rest of the year from an industrial standpoint. We saw a company file confidentially today. We're working on a couple of transactions, so would expect that space to be busy. On the consumer side, I think that's an area that it will come probably more like 2026. There may be a deal or two that happens toward the end of this year. We had a client of ours file confidentially a couple of weeks ago. But again, a lot of those portfolio companies are held by sponsors who have been a little slower than the VCs to bring companies public. I do think also because there's usually a growth element in these consumer IPOs, that's the sector that's usually the last sector to come to market when the IPO market reopens. So We expect it maybe not as, to be as fast as the recovery in the TMT IPO market, but certainly see a lot of activity toward the end of this year and heading into 2026.
So you mentioned sponsors and rates. How do you see sort of the sponsor and rates, dilemma that we've seen over the last couple of quarters play out with the Fed and the expectations for lower rates over the next couple of quarters?
It feels like we've been talking about Fed cuts for a long time, but it does feel like they're finally upon us. And I think at this point, the reality is sponsors are concerned with their ability to raise new funds and need to get liquidity in their portfolio. So we're starting to see the sponsor M&A market pick up. And usually when the sponsor M&A market is busier, we see the IPO market follow very quickly there behind. And we had a couple of sponsor deals, IPOs a couple of weeks ago, which were not necessarily growth stories, but were deleveraging stories that I think the market was not necessarily super excited about. But I do think that there are a lot more growth-oriented, exciting stories, whether it's in the industrial space, the consumer space, even some big TMT names that I think that as we get closer to the end of the year, especially if we get a rate cut in September, that I do think the sponsors will start moving more quickly towards the IPO path.
And then away from the IPO product, we've seen a very resilient market in follow-ons and converts. How do you see that activity sort of going through the rest of the year?
Still expect it to be very busy, particularly given the strength of the market and the overall market levels. And investors continue to be putting capital to work. We were involved in a $1.5 billion primary issuance last week in a block trade for SoFi, which reported fantastic results on Tuesday morning and launched a block trade that evening. That trade cleared very well. You saw Berkshire Hathaway sell down a secondary position in VeriSign last week that was north of $1 billion. And we continue to see the convertible product being used not only by growth companies, but by investment grade companies as a substitute for investment grade debt. So unless something from a macro perspective really changes the landscape, we expect the follow-on and convert market to be busy throughout the rest of the year. Well, Rich, thanks a lot for joining me. And thanks everybody for listening to this episode of the Mizuho Markets Mindset. Until next time.